Hello, you're watching BTVA's Business Nigeria for today, Tuesday, October 27th. And I am Tunji Andrews. Oando has released its Q3 numbers and revenue is down about 5% year on year. At the conference call presentation yesterday, the company said apart from the global price volatility in the space, the unimpressive numbers can also largely be traced to the huge provisions for impairment of assets, increase in operating and administrative expenses, and a few other factors. On today's show, I have Ugodre Obi-Chukwu, a chartered accountant and the publisher of Nairametrics, and also Dolapo Oni, head of energy research at Ecobank Capital, to share some perspective that lies ahead for Oando. Thanks, guys, for joining us on the show.
Pleasure to be here.
Ugodre, welcome.
Always a pleasure.
I mean, we still see the Q3 numbers come out yesterday. I mean, I don't think a lot of us expected that it was going to come out this quickly after waiting a few months for even 2014 numbers. So we now are up to date, basically, as it concerns Oando. But we see about another 9 billion added to the losses, and it's coming to about 52.03 billion now, talking about 9 months in Oando. But let's look at those numbers first before we go back to the analyst call yesterday. Were you expecting more losses?
Yeah, because after the call yesterday, the first thing I did was to quickly go and look at OER numbers. Because OER numbers were released, I think, just about a week or so before, and for Q3, that was. So, and you could see instantly that the impairment we saw in the first year, full year of 2014 was for OML 134. But OER are taking another impairment for OML 125 in Q3, and that was about $98 million. So that was going to hit the books again for Q3, so that was expected. I actually tweeted about it immediately yesterday night, that impairment was coming, and further impairments are still going to come.
Well, talking about further impairments, Ugo, revenue is down 5.48%, and I can remember yesterday Wale Tinubu was talking about the fact that he expects that Oando will come into profitability within the next quarter. Do you think that's visible?
That must have been a joke. I mean, I didn't listen in can anyone believe that? No. I don't see that coming. I mean, to me, I think what they should actually be concerned about is staying, solvent between the next 6 months. Because to me, this is a very precarious period for them. I'm not even looking at top line. Top line is not even out of it. I mean, you can always post top line, growth, but we're looking at bottom line, and then we're also looking at, the value of goodwill that they're still carrying, which they probably still, need to further impair. They're carrying about 200 billion or thereabout in goodwill. And then you look at their cash flow as well. They have about, was it 7 billion naira or thereabout, and with another 14 or something in overdraft. So this is a company that is technically insolvent. I mean, if they post more losses in the last quarter of this year, then we're looking at a negative balance sheet, negative net assets.
Well, first thing I asked, I joined the call yesterday, and I can remember asking Wale Tinubu himself that, in retrospect, thinking back now, looking at all the issues, the cost of buying the ConocoPhillips asset, I asked him, does he think that that was a smart move, buying the ConocoPhillips asset? And he was like, it was a masterstroke. I remember him saying that. Do you agree with him?
Maybe I should declare a bit of my bias here because, again, I covered Oando as a rating analyst previously when I was a rating agency. And then I still cover Oando as an industry analyst now. And I've sort of tracked Oando's struggle to go from downstream to upstream. And I mean, this was year upon year of watching Oando give guidance that we'll get to 10,000, we'll get to 15,000, and production stayed at 4,000. For about 4 or 5 years since they've had upstream assets, production has stayed on the same point. So for them, the idea was the only way we could possibly break out of this
was via an acquisition.
Was to do an inorganic acquisition, just acquire something huge. And that was why for them, it was almost desperation at some point that we have to close this deal. You see, but unfortunately for them, they got into upstream, into that asset, an asset of that size, which would have been fantastic if they closed that deal in 2012. I mean, if they closed that deal in 2013, it would have still been okay. I mean, they would have earned that cash flow for a while, probably boosted their cash flows up to a point. But they came in and then the whole market turned against them. So in hindsight, it wasn't the best of deals. Because, I mean, one of the questions yesterday on the call was that, how did you price that asset? How did you arrive at 1.7? I think the nearest person who bid to them, the nearest bidder was roughly around $1 billion or so. So their bid was possibly about some $700 million higher. You know, so he said they were looking at the 5-year forward curve. And if you were looking at the 5-year forward curve in 2011, 2012, it was still above 100. Yeah. Because prices had just risen to 100 then. The market was still very tight, and everybody felt all was going to stay at 100 for about 5 years. Yeah. And then shale happened. You know.
Looking at share price return over the last 18 months, that is minus 61.21%. We know that in 2014, there was a 70 kobo interim dividend, 2013, 30 kobo final, and 12 was 75 kobo. As shareholders, I mean, that's my concern. Looking forward, is Oando still a good investment?
Well, I got to feel pity for over 200,000 shareholders or so that they currently have. Even though about 50 to 60% of the company is probably owned by 5 people or something like that. I mean, if you look at their annual report. Yeah. But then you still have a lot of Nigerians in there, and they probably. I was checking out their market value of their investment today, and it's probably around 1 billion, and we're looking at that probably drop into eroded to maybe by another 100 or 200 million in the next week or so. So they're in a precarious situation, and you don't want to be a shareholder right now. And I mean, we all saw yesterday the stock was on net offer of over 20 million units and thereabouts. So everybody's just scampering to sell. And then talking about dividend, I was looking at their annual report as well earlier on, and I noticed that their auditors, Ernst & Young, actually, they made a little caveat on the dividend that they declared in 2014. They actually did declare dividend ahead of the end of the year. It's like you're going to earn 100 million, then you declare dividend. So that's actually not best practice. And this is just some of the desperation that you've seen over the last few years, and it's not really looking good for shareholders right now. I mean, if I was a shareholder, I want to call out.
We're talking about them being able to stay solvent, liquidity issues. I mean, I'm not sure any bank is going to listen to them in terms of trying to expand their lines of credit at this time. How do you think they can raise more funds? Because that is the critical part for me.
Exactly, and let me jump in on that. The fact is this: if you look at where they are currently, Oando has equity fatigue. They've issued equity every year since 2012. True. It's pretty much an equity issue that's come out every year. And where they stand currently as well, they still have a debt-to-equity ratio of 3.36. Yeah. In fact, one of the questions I wanted to answer on the call yesterday was, hasn't this particularly triggered part of your loan covenants? Because again, typically every loan transaction there's hedge, and then there's usually some covenants that look, you shouldn't exceed this level of debt to equity. Yeah. And then you shouldn't exceed this level of stuff, maybe dilution of equity or stuff like that. There are various covenants, and I see that's very high. I mean, this is just interest-bearing debt to equity. We're not talking about the entire, debt as broadly defined. So it's high. So they have to find a way, and they don't have the cash flow to say, we're going to inject more cash flow into the business. As it is currently, whatever cash they're generating is going straight into the repayment of various facilities. In fact, they have a growing amount of restricted cash, which is usually cash kept for debt service. So you can notice all that in the balance sheet, all those stresses on cash flow in the balance sheet as well. So where is the cash going to come from? I think going forward, they have pretty much only just one option, or two options. Number one is the key equity holders would have to inject more equity into the business. One. The second one is they would have to sell businesses or assets. So we've seen them sell Eastern Horizon Gas Company. We've seen them sell Oando downstream. They would have to look for more assets to sell. Maybe they'll start with their rigs. They've said they're going to write down those rigs, so they will have to sell those rigs. Probably won't be sold for much in this.
They've written down.
Yeah, so they probably won't get that.
60 billion or so.
About 60 billion, so they probably won't get much for those. So they'll have to look at another part of the business. That's, okay, let's carve this out and let's sell it.
One of the things I did still take away from that meeting is you can't take away the guts of Wale Tinubu as a person. I mean, he seems to be bullish. I mean, he was still audacious yesterday, speaking, we will come to profitability, we're going to turn this around, just trust us. And, I mean, I know that there's a whole lot of market sentiment around, can we trust them? This has happened a couple of times. Some analysts also asked that yesterday. But my question is, I mean, what can Oando do right now? We need this company to stay alive. I mean, this is one of our own.
You know, Tunji, history is full of CEOs in the past who have been under pressure who have always punched their fists in the air. If you recall the days of Lehman in 2008,
Lehman Brothers.
Dick Flood, who was the CEO then, I mean, up until 2 days before, Lehman went bust, he was still very confident, and he was, even when he was doing deals, he refused a lot of offers, that probably would have kept the company afloat. So we've seen that happen, So all you want is just a CEO that says, you know what, guys, we've made mistakes, right? And this is where I think the direction of the company should go. If you ask me, that company just has to split up. That's just the only thing you got to do. You got to split it up, because one thing I think they've done is a lot of their debts are ring-fenced to a lot of the subsidiaries. So split them up and let shareholders have a better view of what the company is like. You just have a lot of convoluted structures here and there. So nobody really understands what is what. It's difficult. So they probably have to come out and explain to you what is happening. So to me, it's not really about sounding overtly confident or bullish about what's happening. You've been sounding bullish for the last 5 years, and nothing has happened. Shareholders are suffering, right? So to me, this is the time investors need to come out hard on Oando and ask them, what is your plans? How do you intend to stay afloat? Are you going to split up this company or allow it go bust?
Thank you very much, Dolapo Oni,
Good to be here.
Head of Energy Research, Ecobank Capital, and also Ugodre Obi-Chukwu. He's the publisher of Nairametrics and also a chartered accountant. Thank you very much for being with us on the show, guys. You can always continue to follow the discussion by hashtagging Business Nigeria on Twitter. You follow us at Business and Btva Newsroom. And till next time, because we'll also continue to follow the story. It's earnings season. Do not forget to follow the show, because we're going to be giving you more results as they do come out. Till next time, my name is Tunji Andrews. Stay safe.